Well, howdy there, partner.
I hope you're having a phenomenal day, and more importantly, I hope you are watching this video in time because I have a bit of a timely and more so urgent update for all of you. Now, when I'm saying you, I'm talking to you, my fellow degenerate trader. I'm sure, like me in this high volatility environment, your eyes are glued to the screen watching every single minute bar of every single chart. What we're seeing right now, pure chaos, pure pandemonium, and with high volatility, yes, there's a good reason we're watching it all because there's plentiful opportunity. So in this video, I'm quickly going to be breaking down all the major things that played out in the market today because you never know if it might be impacting the next trading session or the remainder of the week. But more so, I need to talk about tomorrow, i.e. the urgent update, because not only do we have crazy things going on with tariffs and the trade war, we're seeing crazy things in the options market. And don't forget, we have an inflation report. So I need to prep you guys on all the things to expect to ideally increase our chances of success for tomorrow. But with that being said, if you enjoy these type of breakdowns, let me know by hitting the like button. Don't forget to subscribe and give me a little bit of a shout out in the comment below. All that type of engagement really does help get this video in front of other people who might end up caring about it. I do appreciate all the support. With that being said, let's rock. Tonto, when the world's largest casino officially closed, it became very clear that we are not getting the classic turnaround Tuesday, i.e. the pain is continuing. Dow drops more than 450 points, S&P 500 posts back-to-back loss over Trump tariff uncertainty. If you look at the SPY right here, down about 0.8%, the Q's less, down about 0.2%, Bitcoin popping a little bit, VIX coming down a little bit, but overall in some of the favorite tech names, I'm actually seeing quite a bit of green, but that's more so of the reversionary bounce from the fact that we got our teeth kicked in yesterday. And yes, this all does relate to the uncertainty around the word tariff. Tariffs, but everything is exempt. That's seemingly the pathway we're on right now. And what a wild day it was in the whole political sphere. From baseball bats to caskets, Trump tariffs set to hit home. So everyone's like, is it impacting everything? Is it impacting nothing? And then we got this little beauty. Trump raises Canadian steel, aluminum tariffs to 50% in retaliation for Ontario energy duties. So basically, hey, not only are we going to tariff it, but then he got mad about Ontario clapping back and saying, we actually control a lot of the flow of your energy. So they were going to tariff it. And it got to a pretty wild point. President Trump says all tariffs on Canada will disappear if they become our 51st state. So still in the heat of craziness, a little bit of comedy, but before we knew it, it kind of calmed down. Trump reconsiders tariffs hike after Ontario halts the energy charge. So like I said, at one point in the day, tariffs were getting worse. By the end of the day, they were all calming down. Right here, Ontario's Ford suspends U.S. electric surcharge, says Lutnick agrees to the trade talk. So Lutnick is the U.S. Secretary of Commerce, so I guess they're going to be chit-chatting this week, calming the tensions down there. And this all happened roughly midday. That's why we saw a bit of a pump. But what really kickstarted this pump was something completely different. Ukraine agrees to US-led ceasefire plan if Russia accepts. All right, good piece of news there. Little strange though, US resumes military aid and intelligence to Ukraine after agreeing to a ceasefire. I have to admit it, I absolutely love this meme. More weapons after they agreed to a ceasefire? If you have a ceasefire, why do you need more weaponry? So anyway, a little confusing there, but Trump right after this, big meeting with Russia tomorrow. So on top of all the craziness, yes, still like inflation and the options movement, this is something to be considering. And on top of that news, I think I will talk with Putin this week, also coming from Trump later this afternoon. So these are all the things you need to be considering tomorrow. Like I would say all the specialty things, all those sprinkles on top, which are very quickly becoming the entire dessert. But anyway, tomorrow is a big day. We get the CPI report at 8:30 in the morning, the Consumer Price Index. This is a major inflation report coming out an hour before the market opens, and it's going to be the last major inflation report we get before next week's FOMC meeting where they decide what in the world is going on with monetary policy. So of course, we'll be streaming this. Normally the show is Monday to Friday, 9 to 11. It's a live show. It's free. If you're watching this, I implore you to come to the show. We're starting a little bit early tomorrow to capture this. But yeah, of course, we're going to have degenerate trading fun together. And on that note, I want to give you some stats, facts, and figures that those nerds in the lab cooked up for me so you can better handle this particular event. On the screen now is the S&P 500 index, SPX, and all the vertical lines are the last 10 CPI reports. So I said, yo, nerds in the lab, give me some stats that I could share with the awesome Goonie audience so they're all better prepared. And that's exactly what they did. Out of the last 10, 6 of these days were green, 2 of them were red, and 2 of them were neutral. And I said, okay, that's interesting. A little bit more bullish than I would anticipate. Do you have anything else? I said, tell me about the gaps from market close today to the announcement, basically where we open, because remember, the announcement comes out an hour before the market opens. 5 were gap ups, 2 were nothing, and 3 were gap downs. I was like, okay, still, once again, a little bit more bullish, but not the most exciting. So then I noticed a trend. Out of the last 10, all of the bullishness, not all of it, a majority of the bullishness was actually in the first half of the 5. The second half, as in the more recent 5, those were the ones where we get the red days and the gap down. So even though overall this trend would seemingly on the surface level favor the bulls, the trend is actually getting weaker and weaker and weaker, starting to more so favor the bears. And really that's what's happening, is because before we were making good progress on inflation, and more recently we're actually stalling out, or in some cases it's getting worse. That brings us to how were people getting ready for it. On the screen right now, you can see the delta movement with the price of the S&P 500. Throughout the day, we kind of popped around 11, then we were flat, and that's exactly where the market bottomed. And then when we got the Ukraine news, followed by the tariffs that were no longer going to be tariffs, really like that, I don't know, the shortest energy, aluminum, steel spike type of a situation. These two both got unwinded. Basically, people started to get into calls, and because we're in a heavy negative gamma environment, when you get going, you really get going. And then because they were 0 DT calls, I know that because it's the green bars going up right in power hour, people started to lock in their gains, and that was pretty much the end of the move. So with this going into it, I understand that we had a bit of a pop into the end of the day. I see it. I was there with you, but it's really nothing, because the movement was due to 0 DTE call buying. And the fact that I'm filming this after the market is closed means all that gamma, all that delta is now gone. It was 0 DT. It no longer exists. This wasn't people buying longer dated calls. This wasn't people completely capitulating on longer dated puts. It wasn't that at all. It was just people playing the short-term 0 DTE movement on the back-to-back positive news. So it's not necessarily enthusiasm going into tomorrow. And really, the stats, facts, and figures of tomorrow, I would say it is bullish, but it's lessening in power. And then I also want to remind you of seasonality. You could get this for free, macros.locals.com. It's also how you can get into the Goonie trading Discord if you choose. But the seasonality of tomorrow, this is the equity curve. This is the hypothetical equity curve you would have if you bought at open, sold at close. It is clearly favoring the bears. And then on top of that, so does Thursday. So for the next 2 days, the seasonality is a bit more bearish. Now, is seasonality the end all be all? Not necessarily, but I feel a little bit more confident in the seasonality when I'm also seeing the same thing in the options market. Right now in the options market, tomorrow, the 1 DTE, the remainder of the week, the remainder of the month, and just the entire change, all dominated by puts. There's no sub time frame that is somehow call dominated. Right now, the options market is hugely dominated by puts. Now, if you're looking for some upside resistance, the biggest open interest in the short term is around 5,620. And of course, this could change between now and market open, but just as of the point that I'm filming this video. And the biggest downside is 5,550 followed by 5,500 flat. So those would be my major downside targets, once again, on SPX. So you could do the conversion over to the SPY levels if that's what you're tracking. But right now, yeah, it was a red day. Turnaround Tuesday didn't happen. We saw a little bit, a brief amount of bullishness that was short-lived because it was all just 0 DT calls. Tomorrow we have the big announcement, and I think more than that is pay attention to anything related to the tariffs. But those are the key levels that I'll personally be watching to. With this whole craziness, we are very much living in a hyper chaotic, hyper high volatility time, and it's just because of things like this. So in an interview today, Trump, the sell-off doesn't concern me. Okay, maybe it should. Trump, I don't see a recession at all. Well, a while ago, he was saying, maybe it happens, maybe it doesn't. Then Lutnick was saying he doesn't see it. And now Trump's saying he doesn't see it. And this one was probably my favorite. The country is going to boom. So just a generically, I don't know, high level vision of grandeur, I suppose you could call it. But right now, based on the current option structure, the news and the sentiment overall of the market, I would truly say that we still have pain in the short term. I'm not sitting here calling for doomsday. I think we have a massive rally in late March, early April, something like that. And then from there, we'll have to revisit the whole thing. I'm not here for doomsday. I'm here to better prepare everyone, because in these high volatility environments, that's exactly when traders like you and me, retail traders, can finally make a lot of money. That's what I have for you. Obviously, I hope to see you in the live show. Don't forget to join up with the Discord if that's something you're interested in. I appreciate your time. I appreciate the good vibes. I'll catch you in the next one.